Good morning, my name is Christelle from Frans, the Klerk Independent Technical Analyst. Hudaco is the first one on our list this week. And we can see the stochastic is sitting here on a 59. It's neither overbought or oversold. And we can see it looks like the share is losing steam on this line graph. Why? Because every time the bounce happened, it looks like it found resistance at a lower level. My top here is back in the beginning of 2023, but the critical level is now that 40-week moving average, that red line, waiting at 154.77. Below that neckline, the long-term sentiment towards Hudaco will change to negative. Critical levels of support at the moment is waiting at 151 Rand and 7 cents, and then there below 144 or 145 Rand and 6 cents. Below 145 and 6 cents, an ugly inverse cup and handle formation will be confirmed. And we know by now, that neckline, the share can take this whole length of the handle and project it downwards, can take it back to these levels of around 130 Rand. Only when the share starts to consolidate above the top of the handle, waiting at 161 Rand 98, only above that level will we say, okay, the warning formation of this possible inverse cup and handle is off the table. And my critical support, as I've said, is waiting at 151.07. Is it a time to buy the share? No, not when your stochastic is sitting on a 59. You should actually consider taking some profit at the moment. We can see even on the shadows, look how beautifully they've supported these support lines, 145 as well as that 151.07. So depending on how greedy you are, you can use them as protection levels or take the profit should you want to now. If you do believe that the momentum to the top can continue, as the stochastic implies that it can, then that strong level of resistance that you need to keep an eye on is the 161.98. But at the moment, it looks like it's consolidating sideways. Keep in mind, these are weekly graphs. So this candle is not finished yet. The line graph and the candle graph will only be finished by Friday's close. And that means the textbooks say you make the decision then on the Monday. Sanlam, ticker SLM, had a beautiful rally to the top. And now it's a question, okay, one, it's changed that 40-week moving average into a support. The red line waiting at 58 Rand. That means the long-term sentiment towards the share is positive. But the share gave a beautiful rally. Look how strongly these higher lows have been confirmed. And now it looks, one, it is overbought. It's sitting on a 94. So that elastic band is extremely stretched to the side. And the probability of a pullback or profit taking will be on the cards or confirmed once that blue line, the percentage K line, starts to break downwards through the orange line. And that's when we refer to it as a negative divergence. I don't see that yet. So the momentum to the top is clearly in place. Again, it looks like it's consolidating sideways. If I look at a candle graph, we can see that they are protecting the Sanlam price in a pullback. The long shadows at the bottom of the candles implies, listen, they're protecting the share price. But this can be seen as possible hanging man's candles. Hanging man candles appear at the top of a rally. It's got a long tail at the bottom with a relatively small real body. And the negativity around a hanging man will only be confirmed when the next candle is a bearish type of candle. So let's see if the next candle, which will only be next week, or if this candle now, if this week's candle, if this one changes into a bearish type of candle, then this negative hanging man will be confirmed, telling me the orange light is flashing that we might see lower levels first, that we might see some profit taking on Sanlam. Very important, look at where that next strong resistance is waiting, and that's in the high in the week of the 28th of March, and that is waiting at 73.20. Now there's the next strong resistance on Sanlam that is waiting there at 73.20. Above that level, we can assume that the momentum to the top can continue again. Santam, Ronaldo wanted us to look at Santam, ticker SNT. Also a share that really sparked nice upside, beautiful profit, beautiful risings in the making. My 40-week moving average has changed into a support, 283.49. That is seen as very positive. My stochastic is sitting on an 83, but look at this. Let's just stand still there for a moment. Look what the stochastic has done. It's pulled back, found support without being oversold, and bounced again with a positive divergence. That is seen as positive. It's not a place where I will buy the share. I want to buy the share when it's oversold. But that is a very good indication that in the slightest pullback, in the smallest profit taking, there were definitely investors that protected the share for some upside. Now, the strong resistance that is waiting on Santam is obviously there at the tweezer top right, and that is waiting at 316 Rand. What is a tweezer top? It's 2 consecutive candles where resistance was found at almost the same levels. And the negativity around them will be confirmed once the lower shadow or real body on either one of the candles starts to change into a resistance. But we can see even in this week's candle, clear optimism. They immediately started to protect it with a bullish engulfing candle. So let's see if this stochastic that is starting to appear to the upside will continue, and whether they can change that resistance back into a support again. So if you've got Santam, consider taking some profits, especially below that strong support that is waiting there at 300 Rand. Below 300 Rand, Santam on a weekly graph will show the first sign of weakness. For those of you who entered at better levels and wanted to hold on maybe a little bit longer, your next strong support is that 40-week moving average, 283 Rand 49. Below that level on a Friday close, assuming you're looking at weekly graphs, the second warning on Santam will be on the cards. Everybody wants to know where the possibility of the Rand is, and their request was to look at the dollar index. At the moment, we can see that the strength in the dollar was in place since the week of the 17th of July. The dollar index has changed their 40-week moving average into a support. That means the strength in the dollar can continue, which implies if everything else remains the same, we can expect a weaker Rand. However, look at this elastic band. Look how overbought, how overstretched the stochastic is on the dollar index. That means the probability for a pullback, the probability for a stronger, a weaker dollar and a stronger Rand then is on the card. I don't have my negative divergence yet. That percentage blue line has not broken downwards through my orange line. But with this, after this massive rally in the dollar, I expect a little bit of a pullback. I expect a little bit of a weaker dollar first before we maybe see more strength. And then something we continue to highlight is the fact that we've got a head and shoulder formation here on the dollar index, then can take this dollar a lot weaker. I'm going to draw this for you. I've got a left shoulder, a massive head, and a first right shoulder, second right shoulder, little bit of a false break, and even a third right shoulder, assuming that we see a retracement. Now, only above the highest part of the first right shoulder, because that is the shoulder that is the highest, only above 105.88 on the dollar index can I say, shoo, my warning of this head and shoulder is off the table. So for a longer term investor, this head and shoulder formation saying we can expect a weaker dollar, assuming that 105.88 remains a resistance. And you know what that means for the Rand? The expectation of a stronger Rand, assuming there's no political news or massive shakings. So this dollar index gives you an idea of what the Rand can do over time, assuming everything else remains the same and there's no shocking news or surprises. Don't forget to send through your request through to next week's recording, either via email to admin@fransdeklerk.com or via Twitter. Have a fantastic week. Take care.